पहले तोड़ो, फिर जोड़ो. Wondering what does this mean? Hi everyone and welcome to our series on valuation. In this episode, we will be discussing about sum of the parts valuation. Sum of the parts is a way of valuing a company by dividing the different segments of the company into two or different parts and adding them up to get the total part of the company, the total value which determines at what company stands. So we can do one thing is, in this method, the company is broken into different parts and we can know what every part contributes to the business. So this is usually done when company is functioning into different market structures or different market segments. So we can take up example of Reliance Industries Limited. Reliance Industries Limited is the largest conglomerate company of India, which is having its business in oil and gas, petrochemicals and refinery, as well as in retail and consumer goods, and also in the telecommunication groups. One way to value such a diversified company can be SOTP model. So we can divide the Reliance Industry Limited into four segments. First will be exploration and production, which is E&P. Second will be refining and petrochemicals, which can be R&P. Also, we can use retail and as well as we can introduce digital services. So when we have four segments, we will use the SOTP model according to the characteristics of each of the segment market. So first would be the E&P, which is exploration and production model, where we'll be using the discounted cash flow from the future cash flows of oil and gas reserves. For the second and third segment, we'll be using the comparable company analysis or EBITDA, which is earning before interest, tax, depreciation and amortization. With this multiple, we will be able to understand where the company is standing in total market structure. So when we move on to fourth segment, which is Reliance Jio, we will be using the discounted cash flow from the future cash flows of the subscribers and data usage. Once we get up the total value from all of these components, we will be adding them up to get the enterprise value. Now we will reduce the net debt value from the enterprise value to get the equity value. So to get the per share, we will be dividing the equity value upon the number of outstanding shares in the market. This is how the SOTP model works, where we get to know where the company's potential is arising and to know the hidden sources where the company is rising. If you have any questions or feedback on our videos, please leave them in the comments below. And don't forget to like, share and subscribe to our channel for more such videos.